Hello and welcome to another episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below. As always, do not keep any more funds than you need for trading on any given centralized platform. The whole point of leverage, if used, is to allow you to reduce your counterparty risk. So let's talk about mostly Bitcoin, but also ETH and some altcoins. So on the BTC front, the macro monthly range is between 58 and 35k. We're currently trading around resistance and the range low. I don't know how this monthly is going to close. There's a day left and we're currently consolidating. I think if it closes below, it's not the end of the world because it wouldn't be a nasty rejection. And that argument is at least balanced by the fact that we broke out from this long range here. So on the bearish side, you've got, hey, we're at resistance. On the bullish side, we've got, hey, we've broken out from a large macro range. So the monthly will be sort of break even at best, I think, if it were to close in this area. Obviously, if it closes above 35k, that would be welcome and it would align with the weekly timeframe reclaim. If it doesn't, it's not the end of the world. If it closes back within the breakout range below 30k, then it would look bad. Now, I think the weekly timeframe is probably the most important one for the time being. If we look at the weekly range low, that has reclaimed the 32k former macro range low on a closing basis. So unlike the monthly, this is closed through resistance. I think that's good. There are previous examples of BTC doing good work on the weekly time frame when having these large weekly breakouts or reclaims. The most prominent examples that come to mind are the 6k breakdown and reclaim that happened in this instance. Momentum candle through it and it just went a lot higher from that point. And then the other one, of course, is the 12k breakout that took the market precipitously higher. Granted, macro conditions and all this other stuff completely different, but from a purely technical perspective, at the very least, I can confidently argue that weekly shifts in market structure are very much worth paying attention to. The 6k level works both ways. We had the weekly break and the market nuked, had the weekly reclaim, and the market flew. The same works for actually 30k, which is where, the range low that we're trading in at the moment, where we had the breakdown from that level, market ended up going a lot lower. And so at the very least, you'd be forgiven for paying a lot of attention to 32k. And I think probably one of the more important weekly signals we've had in some time. Obviously, there are instances of this not working as well, or at least not sort of resolving particularly quickly. Most of them have actually been quite recent. So for example, the weekly breakdown of 18 to 20k didn't lead to continuation. Instead, that was the bottom before a reversal. Similarly, on the weekly time frame, the 24k breakout pretty much had one good week and then a very long range to follow. So on balance, I still think this weekly reclaim breakout pattern is very important because it could lead to the types of moves that we discussed, but it's also, it doesn't have to be the case because recent examples of weekly range breakouts and breakdowns have been slightly more forgiving or slightly less dramatic is one way to put it. Nonetheless, a signal is a signal, and this is a positive development on the weekly time frame. I think if we were to map a weekly range on this between 32 and 58, similar to how we did it on the monthly, we get essentially the same levels where if this weekly breakout signal sticks, then the next high time frame trouble area is around 44 to 46k or the 45 midpoint on the weekly. Of course, there are other short-term levels that could provide a reaction, such as this former range low at around 36k, but bigger picture, if this weekly reclaim signal is significant or important, it shouldn't be stopping at 36k or having trouble with these sort of interim and intermediate type of areas. To be clear, this weekly close has sort of two signals packed into one, and this is important to understand from an invalidation point of view. So two things happened here. One is the aforementioned macro range reclaim. So, support, big breakdown, bear market, potential reclaim. So that's the first thing that's going on. And the second thing that's going on is slightly more recent or local, which is that the market essentially consolidated between the months of April and October and then broke out from that range. So it's two packed into one. The first one, big range reclaim. Second one is big range breakout as well. So in terms of how that applies to your invalidation, I think if you want to be conservative, if you're a conservative bull, then anything that closes the weekly back below 32k is bad news because one of your arguments has gone out the window and the macro reclaimed has failed and has potentially skewed towards turning into a deviation. So that would be bad. If you want to be more loose with it and less conservative, then I think your invalidation is below 30k on the weekly, because at that point, the macro reclaim argument is invalidated and the local range breakout argument is invalidated as well, and the whole thing would start to look pretty horrendous. At that point, I would assume that this is just the failed breakout portion of this large range, and just like we cleaned up the highs, my expectation would be that we'd come and clean up the lows below 25k, and it would look all very terrible. We don't have that at the moment. The weekly close as it stands is good, but it's worth being aware of where it could go wrong if it is going to go wrong, which is below 32k, aggressive below 30k if you want to be more loose with it. Otherwise, I'm going to assume, until proven otherwise, that if we stay above 32k, then we will be trading back within the macro range, whose relevant levels are the 44.46 midpoint and sort of 58.60 range high. Okay, I think that's really where most of my focus is, on the weekly time frame and whether this weekly breakout plays out. I don't think there's enough meaningful structure on the daily time frame yet to be helpful in its own right. If I had to be, if I had to reach for levels, I'd probably take this lowest close and last low pre-break range low at 35k. So a daily close through there would be some indication that the higher time frame idea is picking up steam, and this portion that we're in right now is just a consolidation before continuation and a further impulse. So, if you're looking for levels close to the market, I think 35 daily is acceptable. And I think what adds some significance to this admittedly far away level is that on the monthly, that lines up pretty much exactly with monthly resistance as well. So you would have a daily close through a daily range low and also be trading above monthly resistance. Now, could that be a trap because you're taking a daily signal into monthly resistance? Yes, but it's at least something, and it's also sort of has its own merits on the daily time frame. Otherwise, I don't think we've had enough price action within the context of this consolidation to be drawing out ranges or anything else. I really think the weekly time frame is the most important and most obvious one at the moment, at the very least. If this range continues for longer without breaking out, then we could map out a daily consolidation and look to do business at the boundaries and the extremities. But given we've only had 4 or 5 candles, I don't think there's enough there on the daily time frame to make sense of it. On the lower timeframes, which if the market starts to trend are probably going to be more helpful than the weekly and the daily, depending on your trading style and types of entries you take. I'm not putting too much stock into the hourly range high itself, or at least I'm not adding additional levels. I think the monthly and daily 35k captures most of this current ceiling quite well. In terms of what are the acceptable levels for the market to dip to, well, as mentioned, we can sort of reverse engineer our invalidation and look for proximity to invalidation as potential areas to do business if the market pulls back. It doesn't have to, but if it does, it's good to know where it's pulling back to. So 32.2k, simply because based on the proximity to invalidation, is a good level. If you look at that on the hourly, that's slightly below where the range low is at the moment, but that's on my sort of personal futures chart. And the other one that I have is this daily cluster between 33.3 and 33k as a sort of hourly pocket, if you will, that's built up just above this weekly area. So that's really it in terms of BTC levels. I've got 35k as the monthly resistance and daily potential reclaim level. In terms of intraday dips, the nearest one to market that I've got, and admittedly this is quite conservative, is 33k to 33.3k, and then the deeper pullback level, sort of as far as it can go without compromising the entire bullish reclaim structure and breakout patterns, is 32.2k, which would have to be held on the weekly closing basis. Otherwise, I think the market would look very ugly. Again, I did dip down to the hourly timeframes and the lower timeframes, given that these moves can be sort of paralyzing on the monthly, weekly, and daily, but most of my focus is still on the weekly signal, to be honest, here at 32.2k, and the monthly range is my sort of northern star, if you will, that's going to guide what are the next important high time frame areas should the market continue. So yeah, I think it's a fairly straightforward picture at the moment. If the market's bullish, it should really just go up. If it does dip, it shouldn't be accepted below 32.2, might even be more shallow, as we discussed with some of those hourly levels. If 32.2 fails, and certainly if 30k fails, then you can become full-blown bear-tard, and I think the technicals would support you in that quest. Otherwise, it's worth giving this thing a chance, I think. ETH BTC is still not particularly great. It's been a very punishing exercise during the course, certainly of the accelerated portion of this downtrend, to get excited over green candles. So until there's a decent structure shift on this thing, I don't think ETH is going to be a better bet over BTC. Arguably, this isn't the most bearish development in the world, because a lot of, as we discussed on Casual Friday, a decent proxy for froth in the market is ETH BTC, and by extension, how a lot of the altcoins are going to be behaving. And for the time being, the risk appetite hasn't really spilled over, which could suggest that there's more room for non-frothy upside in BTC. But if ETH starts to outperform, I'd rather it happen significantly above the 30K wall of worry, rather than into monthly resistance. But yeah, this thing's been bleeding and going down. Maybe something silly and interesting happens as we approach the sort of local maxima, but for me, this isn't even support. As discussed last week, for me, the real support is 0.57, and that's been broken quite significantly. So I don't really have any levels down here at the lows, and the only ETH BTC levels I care about would be the 0.57 reclaim, or a bigger nuke back down into sort of pre-breakdown levels closer to 0.4 round number. And this is sort of a dead spot for me, which could lead to, short-term bounces or intraday stuff, but bigger picture, weekly swing, yearly downtrend stuff, I don't really have anything here of note. By extension, that makes ETH USD pretty tricky. It would be a lot easier if BTC just kind of kept going and ETH BTC kept being pressured, and then if it were to drop into those ETH BTC support levels, so the rotation become very straightforward. That's a bit of a Cinderella story, probably unlikely to happen. Absent that, I'd either want ETH BTC to reverse trend meaningfully, fully capitulate, or I'm just going to stay away from it. On the USD front, if you're looking for levels, as discussed many months ago, and I think is still a sort of reasonable argument to make, this 1935 former range high, you've got resistance, we deviated it, spent months hugging this level, eventually moved lower. I still think it's a good weekly pivot. So at the very least, while BTC has sort of reclaimed its range and broke the consolidation on the weekly and has all these, divergences in terms of market structure, the USD pair would do well to trade above and close above 1935 on the weekly. At least then you have a weekly breakout. That doesn't mean it'll outperform Bitcoin, but at least this chart will look significantly less miserable, or at least less competitive than it does for the time being. I don't really have anything else. I mean, on the daily time frame, it's quite good that it shifted structure at this 1745 level and made a higher high. But really, at this point, if the market's going to move higher, then ETH BTC is important, because you don't want to be allocated to the weaker mover of the two. So, and also, just as a side note, the signal, the weekly breakout on BTC, I think is much more interesting than anything that's going on the ETH daily or weekly for the time being, which is why most of my attention is there as well. Altcoins, we can see, are a bit of a mixed bag for the time being. Most of them actually look quite similar in terms of structure, where you had long sort of downtrending consolidation things in the USD pairs, and a lot of them have just broken to the upside and made higher highs and what have you. There are some outliers out of these that look significantly structurally different than the others. My focus has still been on INJ, Link, and Solana, I believe, is the list. INJ, because it just won't stop going up, and it's reaching some areas that are a bit trickier sort of to chase into contextually. Like $14, although we closed above that on the weekly. And these types of trends are pretty tricky if you're just like a high time frame pullback type of person. But purely in terms of relative strength, that's been on my watch list. On the Link front, it's the weekly breakout signal that I still think is interesting and hasn't really reached a particularly scary area yet. And then the elephant in the room being Solana, which has just been really strong. On the monthly, I recall talking about this 24 level that looks like we're going to completely blast through it, sort of no longer relevant. Even on the weekly time frame, if you were to mark out some sort of support resistance inflection point with this former range low at around $30, also a nice sort of psychological round number. Looks like we had a weekly close above it, and that looks pretty strong. Even if you were to quite conservatively take the top of the cluster here at $33. We're currently trading above that, so that looks all right. I'm slightly scared of this thing because there's a conference going on at the moment. So, you know, weekly extremity plus conference, maybe that's just bear market PTSD. But nonetheless, especially if you look at Sol BTC, this has been just very strong. You know, it's very hard for altcoins to keep up with BTC during the course of this entire portion of time here. And this thing remained range bound and is making pretty decent progress relative to BTC and ETH. So that's a very interesting one. And, you know, that argument for the support resistance flip is also very visible on the daily, trading above 28, 29. You know, it's a fairly self-evident pivot. You can just eyeball the thing and look at, you know, you had lows here, you had highs here. It looks like we're well clear of those. So kind of similar to BTC, where you've got a high time frame, weekly / daily reclaim breakout signal of some sort, and that's pretty strong. I would suggest, especially given a lot of these altcoins are up significantly from their floors and have broken market structure in most cases on the certainly intraday, but likely daily timeframes as well. It's going to be pretty hard to pick which ones you want, if any. The safest option would be to be a DonAlt style boomer and just look at BTC because of it's easier to follow just one coin plus narrative flows from ETF and relative outperformance on the BTC pairs. That's fine. But if you are going to look at specific altcoins to choose, I would do two things. One is to look at the altcoin against BTC to make sure you're not taking more risk for a smaller reward. So make sure that it's at least outperforming BTC or looks like relative strength or looks like it's going to break out. So you're not like buying something more speculative and less liquid just to get worse returns. And the other thing I would do is, as discussed on plenty of other videos, build some sort of watch list or correlation matrix or something to flag the outlier type of behaviors to allow you to basically point you in the correct direction when it comes to picking which altcoins to trade. I've got a tweet up somewhere on my account where I talked about how to curate those lists. If you're particularly lazy, you could just go on Velo and under the market tab, I believe, you can look at price changes in large caps over a day, 4 hours, 1 hour, a week. They've also got mid caps and small caps, top gainers, top losers. You can also look at open interest changes to see just where there's a lot of speculation going on, a lot of, you know, contracts being opened, if you will, and a lot of net positions being expanded, and try to perhaps align the two. Maybe someone's front running news. Maybe there's a big breakout that the market's piling into. But essentially, most of the interesting altcoin flags, at least for me, will come from stuff that was strong while BTC was doing all of this. You know, fairly self-evident what those ones look like. You consult the altcoin BTC pairs to see if it's even worth punting those altcoins as opposed to the boring orange coin. And then for shorter to medium-term trading, looking at these types of screeners over the course of a week, a day, or even intraday across different market caps to see either where there's a lot of speculation going on from an open interest point of view, or just looking at price changes and see what stands out in the most self-evident manner possible. I do have a short document I've prepared if we really just completely send in terms of how to approach those market conditions. If that's of any interest to you, let me know in the comments and I'll probably make a separate dedicated video towards it on this channel or on the Cred channel. But otherwise, I think I've spoken for long enough. Thank you for listening. Thank you for all the support on the channel recently, especially on Casual Friday. We hope you continue to enjoy the content we provide. Go to trletter.com for our free weekly newsletter and subscribe to the channel if you haven't already. Like the video, and thank you to Woo for supporting the show. Their links are in the description. Enough plugs and chills. I'm going to shut up. Have a wonderful week and see you later.